Thank you. It's a pleasure to be with you all. I think we're going to start the talk with introductions, and then John and I are going to interview each other. Maybe we'll take some questions from the audience as well. We'll see where this goes. But John, maybe you could tell the audience a little about yourself.
Sure. I'm John Darsie. I'm a partner at SkyBridge Capital, which is a global alternative investment firm with about $3 billion under management. Starting in about 2020, we're a 20-year-old firm, but starting in about 2020, we decided to pull the trigger on a theme that we had been studying for several years, that we thought a digital-first economy and a low-interest rate environment would be good for digital assets. So we started allocating heavily to the digital asset space, to the point that today, in 2025, about 70%, I believe, of our overall AUM is in digital asset-related investments, including an enthusiastic investment in Avalanche, which we think as sort of the hype cycle of crypto recedes, that Avalanche is going to be one of the big winners in the layer one space as a Swiss Army knife for all types of different real-world applications. I'm also the CEO of SALT, which is a global thought leadership forum and event series that we do around the world, where we try to convene, curate groups of people, of a few hundred people today, to discuss issues related to digital innovation in financial services and AI. But it's great to be here, and thank you to the Avalanche team for having me and for bringing us all to this great venue.
Yeah, I think that I will echo what John said. It's super exciting to be with you all today here at the Avalanche Summit in historic Hatfield House. Check out the Elizabeth Oak. I've heard it's quite something, if you can find it. But Baylor Myers here. I am with BitGo. We are one of the original crypto companies. We've got about $100 billion in assets on our platform. We started out as one of the first wallet platforms in 2013, founded by Mike Belshie. Some of you may know Mike if you're familiar with these conferences, but he's a bit of a legend in the software engineering industry. He started out at Netscape, building one of the first internet browsers. He then founded a company called Lookout that he sold to Microsoft, and that folded into Outlook. Then he was recruited from Microsoft over to Google, where he built Google Chrome and authored the HTTP 2.0 protocol. After all of that, he got into crypto in 2012 as sort of the next evolution of the internet. So BitGo has always been at the forefront of the digital asset industry. We have our wallet platform, we are a custodian, and then we do institutional trading and lending. So I'm very excited to represent BitGo this afternoon here at the conference. Prior to joining BitGo, I was at the Treasury Department, where I worked for Secretary Mnuchin in the first Trump administration. Depending on how this talk goes, I think we'll get a little into policy. As John mentioned, he works for Anthony Scaramucci. We all know each other quite well, and I think it could get interesting if we take a few questions. But very excited to be here. And John, I guess to start the discussion, to keep it more focused on Avalanche and I guess deployment of capital, maybe you could share with the audience what you're seeing on the institutional development front from a SkyBridge perspective.
Yeah, I think to this point, the interest has revolved around Bitcoin, if you're talking about institutional asset allocators. So when we started allocating to the space in 2020, we started very much with Bitcoin. Like a lot of people, Bitcoin was our gateway drug into the broader digital asset ecosystem. But when we have conversations with whether it's pensions, endowments, foundations, fund of funds, family offices even, still, it's just getting them to Bitcoin, getting them to yes on Bitcoin is a starting point. And then, at that point, it starts to open up a conversation around the rest of the industry. And I think part of that is the regulatory clarity that existed more around Bitcoin. Obviously, these types of buttoned-up institutions are looking to do things that have clearly defined regulation and rules. But I think we are entering a new era here, obviously, and I think much has been made about regulatory clarity and the stablecoin bill and potentially market structure bill coming through. But I think people still underestimate the impact that's going to have on institutional capital flows. I think everyone's just waiting, for that starting gun to be fired off in terms of creating clear sets of rules and guidelines and laws around what can be tokenized, what they can invest in, clear tax implications of different types of investments. So, we have sort of evolved as a firm, and we view our role as being a bridge, no pun intended, between the institutional asset management community and the decentralized finance community. And that's what we do at SALT, that's what we do at SkyBridge. And we're extremely happy with our decision to go headfirst into this asset class. Obviously, with Bitcoin today back near all-time highs, and a lot of our other investments in the space performing well. But I think people again are still underestimating the impact that these changes in Congress and this new set of laws and regulations are going to have on capital flows. And I think Avalanche is positioned very well to be a huge beneficiary of that. I think there's a lot of, frankly, a lot of garbage in crypto, if I'm being honest with you, my personal opinion. And I think Avalanche has continued to have their heads down and continued to build in a responsible and institutional way. And I think Avalanche's moment, obviously I'm biased because we're investors and big believers in the ecosystem, but as I talk to founders and builders here, it makes me even more confident that the next wave of digital asset blockchain adoption, that Avalanche is going to be a huge part of that. Turning it around to you, Baylor, I would like to talk a little bit about, we were talking before we went on and talking last night, you worked for Secretary Steve Mnuchin at the United States Treasury Department for President Donald Trump, which people forget sometimes that during his first term, he wasn't super pro-crypto, and Secretary Mnuchin wasn't super pro-crypto. Why did you make a decision coming out of Treasury to go work in the crypto industry amid that backdrop? And how has the landscape evolved in Washington? What has been your observation about why things have changed so quickly, both with the president, the Treasury, Commerce Department, and just Washington in general?
Sure. Yeah, happy to take that question. We have seen a seismic shift in sentiment among policymakers in Washington since my time there from 2017 to 2021. At the time, I would say Secretary Mnuchin was neutral negative on crypto, and that was probably the same for President Trump in the first term. But what we saw in the intervening 4 years during the Biden administration was an all-out assault on innovation domestically in the U.S., and it had this incredible impact on founders, builders, lifelong Democrats who essentially changed their political persuasions based on persecution by the regulatory agencies in Washington. And so if you look at that evolution from 2021 to 2024, most of it was self-inflicted by the Biden administration and their antagonism towards crypto. And I think also, to speak highly of Avalanche and all of the individuals who have contributed to our industry in the last 4 years, crypto really proved that we have real innovations. We have a lot of value to add to international financial transactions, and that is continuing, I think, to prove its point. And we're looking at a bill right now that may pass the Senate today, Eastern Standard Time, on stablecoins. It's called the Genius Act, and that will be a significant step forward for realizing a solid and clarified regulatory framework in Washington for digital assets, which, as the world's largest economy, will help globally with continued adoption and growth in this space. So super
Let me follow up with you on stablecoins for a minute. So I've talked to the team at BitGo. It seems like everybody in the world wants a stablecoin today. You've supported the launch of World Liberty Financial's USD1. The transaction that took place was announced in the Middle East a few weeks ago. I think there's been discussions at BitGo about should we have a stablecoin. Sort of the stablecoin wars are heating up in a significant way. You saw Mountain Protocol get acquired by Anchorage. What has been BitGo's approach now that it appears we're going to have some regulatory blessing around stablecoins? What has been your approach? Do you think BitGo might launch a stablecoin, or how are you approaching that ecosystem?
Sure. Thanks, John. Yeah, we were very excited to be announced as the infrastructure provider for USD1, which is World Liberty Financial's stablecoin. It got a lot of press, $2 billion plus in market cap over a period of a few days, supporting an investment by MGX into Binance. And from that project that we engaged upon in the fall of this past year, we've actually opened up a whole new business line called Stablecoin as a Service, whereby entities interested in building a stablecoin can contract with BitGo and build that stablecoin on our rails. We see that as a significant...
Is that SaaS? Is that STAS? What's the acronym on that?
We're coming up with something. The marketing team is hot on it. We've got a friend in Joe Brucesi who's going to be pushing our products, I'm sure, as he always has. He's very influential here in the Avalanche community. Joe, good to see you. And we're excited, I think, about that product line. As you guys may know, we're a very large staking provider, maybe the number one in the world, depending on how you count it. So we continue to see adoption in that vertical. But it's super exciting. And I guess from a capital deployment perspective, what are you hearing about stablecoins? Larry Fink is saying everything's going to be tokenized. That's the future of finance. All equities will go in that direction. What are you hearing on Wall Street?
I think we're headed in that direction. We've actually had a lot of recent conversations as stablecoin legislation nears hopefully its conclusion, and then the market structure debate starts to ramp up around, we as a firm, again, our ethos is around how do we drive adoption and make these investments that we've made more successful. We want to be sort of active investors and participants in creating a rising tide in this industry. We've had more conversations around taking some of our private funds and tokenizing them. So, we've talked to the team at Avalanche, we've talked to various providers in the space. We think that reality, again, is much closer than people realize. Galaxy, one-time potential acquirer of BitGo, that transaction didn't go through, but Galaxy just recently uplisted to NASDAQ. Mike Novogratz very loudly talking about their engagement with regulators in Washington around tokenizing their stock and tokenizing different assets that they own.
Maybe I can jump in real quick, because this is actually a perfect case study. As John's talking about Galaxy listing on the NASDAQ, which was a significant achievement for the Galaxy team, that is actually what contributed to our deal not going through. So for those of you who have followed the crypto press closely over the last 4 or 5 years, BitGo was engaged in the first $1 billion plus acquisition by Galaxy in the crypto industry. That was in 2021. And we were not able to close that deal because Galaxy could not list on the NASDAQ, which just happened. So that's the material impact that this regulatory assault had on our industry. It literally blew up the deal. It's caused a lot of hardship for everyone who was involved, but we're super excited to continue a strong commercial relationship with Galaxy, and we're very pleased to see them list on the NASDAQ finally this past week. But please continue on, John.
Yeah, and I think it's a great point that when you have more tokenized assets and you have more publicly traded blockchain digital asset companies, it's going to create a wave of M&A in this space. You've already seen it, again, with Mountain Protocol Anchorage, with USYC being acquired by Circle, a yield-bearing stablecoin at Hashnote. And so I think you're going to see a wave of consolidation and M&A in crypto that I think is going to be good for the ecosystem. I think there's a lot of stuff happening. Again, I think there's a lot of garbage in crypto and there's a lot of real stuff. And I think the average person struggles to discern between, what's real and what's not. And I try to encourage people to come to events like this and talk to builders that I run into and meet as part of these Avalanche Summits to find some of the real stuff that's being built. But I think that consolidation will be healthy. And just another point on capital flows is that I think when we started doing our due diligence on digital assets and digital asset funds starting in 2017, we went to RLPs, which include institutions and also include wealth managers and their financial advisors. They vomited in their mouth when we said we're going to potentially put on digital asset exposure. They made it very clear they did not want us to put that exposure in our portfolio on behalf of them and sometimes their clients, if they're financial advisors or RIAs. They weren't quite as upset about it in 2020, but there was still a lot of skepticism around that decision when we decided to pull the trigger on that allocation in 2020. And again, it's RIAs and financial advisors saying, my clients don't want this, you're making me look bad, why are you doing this? That conversation is completely flipped on its head, where now you have advisors coming to us, whether it be small institutions or financial advisors or RIAs, saying, thank God I have Bitcoin exposure through SkyBridge, because my clients are now beating down my door saying, what are we doing about Bitcoin ETFs? What are we doing about crypto exposure? Why aren't you up to speed on this? And so it's been an education process, and there's been a lot of players in the space. I think somebody like Bitwise has done a great job of education with that community. But the career risk side of allocating to digital assets and participating in tokenization and the digital asset ecosystem has completely flipped on its head, and that will only accelerate in the wake of stablecoin legislation and market structure legislation. Turning back to you, Baylor, I want to talk about market structure because there's all this optimism in Washington around, okay, yeah, we're going to get this all done by the summer recess. Stablecoin is going to fly through, market structure is going to fly through. Coinbase, I think, has lobbied a little bit. They wanted it all done in one fell swoop. That didn't end up being the way that Congress tackled it. Do you think market structure legislation is as close as people want it to be, that summer recess comes and we're ready to tokenize the world and continue to run down that path? Or do you think potentially there's going to be more hang-ups, or where do you see the trajectory of digital asset regulation going?
Sure. So it's a hot topic right now in Washington, whether or not the stablecoin legislation will be combined with the market structure bill, which has a draft out of the House of Representatives right now. And a lot of it, I think, revolves around how market structure will be defined. So certain industry participants have strong views. BitGo's position is that custodial activity should be segregated from exchange activity. Had that occurred, there may never have been an FTX downfall. Had FTX had an independent qualified custodian like BitGo, the whole downturn could have been prevented for our industry. So it's very important, I think, to have proof of reserves and to have independent qualified custody, ideally in cold storage. To push our book a little bit. So we've been spreading that message around Washington right now. We think it's very important to the security of digital asset markets and the way that exchanges operate from an investor protection standpoint. So I think the conversation will evolve over the next few months, depending on how this big, beautiful bill goes, which is the president's priority right now. That's being pushed through Congress as well. I think it could happen by August. But your guess is probably as good as mine when it comes down to all of that. But once these pieces of legislation are locked in, if you're not following domestic politics closely in the U.S., that will really provide the legal framework needed for the federal financial regulatory agencies to go through and make rulemaking. So I would posture probably by mid-2026, we're going to have such a solid foundation in the U.S. Ideally, no one is talking about regulation anymore. We all understand the rules of the road, and most of these talks don't involve me opining on politics and involve more of you guys talking about what the latest, greatest item is that you're building, hopefully with Avalanche.
Just to make a quick point about the custody situation, that was one of the things that held us back from honestly investing in digital assets in 2017 is you had all these digital asset hedge funds that were performing amazingly and had returned thousands of % of capital to their investors, but we go to them and perform operational due diligence, and our team comes back and says, well, this fund has 90% self-custody and all these things. So I think it's a very important point that segregating custody is very important. Obviously, it's something that BitGo has advocated for, so happy to boost my playing partner here, Baylor, on that point. But it's very important, and I think for the institutional adoption of the asset class and institutional capital flows, it's important that those safeguards are in place universally. I don't know. Our clock here has stopped. I don't know. We could talk all day if you want to.
And we could take questions.
We could take questions,
well.
But anybody have a question, or we need to be hurried off stage here?
Yeah.
No questions.
Joe. One question, apparently.
Do you think that any regulatory clarity will be long lasting? Or are we going to live in a world where this administration passes great regulations for the industry, ultimately to be overturned by next administration or change in Congress? Like, do you think this is really lasting or just moment in time?
I'll go first, and I want to pass it to John because he's an astute political observer as well. I think once you get legislation passed through Congress and it's signed by the president, it's fairly difficult to undo that. It would have to take a court action, which has been rare in recent years, and everyone who's working on these bills are hyper attenuated to the court's opinion, the Supreme Court that is, on the legality of these pieces of legislation. And that's why it's so critical we get these bills through this year, ideally before the 2026 midterms, because that will lock in the framework, in my opinion. And even if you had a complete flip in power, and if a very hostile administration came in again against crypto, with the laws on the books and the separations of powers in the United States, we have 3 branches of government, all with equal power. It's very difficult to undo, and it would take years. And hopefully what everyone here is working on will continue to prove the utility and the value of why this industry is so important to finance. But John, I'll give you the last word.
Yeah, I think it's a great point that the importance of legislation is huge, not just SEC guidance or other guidance, but actually codifying this into law. But I do think it's important that at this stage, there's some voices in the crypto community who say, oh, Republicans are the only ones that are supporting us. Those are the only people that we should support in elections, and we should make this a partisan issue, and Republicans will rule for 50 years because Democrats are lost in the woods and they don't know what they're doing. There is some wisdom to that, but I think now is a very important time for the industry to be engaging with Democrats who want to engage constructively on this issue. I'll use somebody like Mark Warner as an example. He's sort of part of the old guard of the Democratic Party, not somebody who you thought would be at the center of all these debates on stablecoin legislation, but I think the industry has done a very good job of sending adults into Washington, engaging with people like Mark Warner. He is engaged and provided feedback on these bills, maybe not everything that everybody dreamed of, but gotten to a point of consensus that I think makes the legislation and makes this movement much more durable. So I think we need to resist the temptation for partisanship, and I think engagement with forward-thinking Democrats like Ruben Gallego and Mark Warner,
Richie Torres.
There's a number of them. Kirsten Gillibrand certainly has been supportive of the industry, but I think Coinbase, Fairshake, others have been smart about that, and I think we need to continue down that path of bipartisanship.
I agree 100%. And on that note, thank you all very much. It was a pleasure speaking with you, John.
Thank you.